All right, what do you do when your company's customer service reps can't come into work because of the pandemic? Well, you automate. Which brings me to LivePerson, the cloud-based software company that's a leader in conversational artificial intelligence technology. It's a leader that's been around for a long time, too. They help other businesses create bots that can talk to customers directly via text. Bots that seem like real people, whom I like, by the way, more than real people. I've been telling you this is exactly the kind of stock that works in the COVID-19 economy. But when LivePerson reported last week, they told a story that was even better than I imagined. While their sales and earnings came in a bit higher than expected, the game changer was the fabulously bullish guidance for next quarter, along with management's conference call commentary. They talked about how the usage of the platform spiked in March and April as clients rushed to embrace automation. No wonder the stock spiked 40% last Wednesday. Leave all the money people are making in this market. Since then, it just keeps roaring. Could this thing have more upside? Let's take a closer look with Rob Locascio. He is the founder, chairman, and CEO of LivePerson. To learn more about the quarter and where his company's headed, Rob, welcome back to Mad Money.
Hey, Jim, how you doing?
All right, so Rob, this was it. I now have to tell people I won't call anyone. I will call no stores. I will call nothing because all I am is put on hold forever and ever. And I cannot believe that these people are not using LivePerson. How can companies afford not to use LivePerson in an era when you're working from home?
They can't. You know, when you looked at what happened with COVID-19 and the contact centers, they all shut down. And so there was this mad dash to get those agents home and take voice calls. And what we've seen is really what we ushered in is really the death of the call center. And I've been talking about this for 2 years, and now it's come. And that's why we saw all this demand, come to us, and we're just doing great with it.
Well, what convinced me, you have this great moment in your call where you said, the barking dog, the crying baby, we don't want that in the background.
I know. The idea that you're answering a call and someone's talking about their bill, paying their bill, and there's like a baby crying, it doesn't make sense. We've said this from the beginning, is that these things need to be automated. And what we saw during the quarter is really, after COVID, I think only about 50% of capacity came back. That's why you're just seeing now, like my bank, which is Chase, they put on the website, like, don't call us, basically. You're going to be on hold forever. So what we need now is to go to automation. We need now is to really change the game and do what we're talking about, changing these conversations, making them digital, bringing them to messaging. And that's what we're doing, and it's really an extraordinary time, I think, now, because finally the call center is really gone.
Well, I mean, look, the PPP involved you calling banks, okay? Well, that was one thing I was never going to do because I knew what would happen when I called the bank. I knew it would just send my blood pressure up. I knew I would say I have so much money with them and this is happening. So I let my wife do it because I am sick and tired of being put on hold with someone I have a lot of money with. I'm not alone.
Yeah, like I said, this is the end. We saw this finally, and it all showed up in the numbers. We grew 18%, in Q1. We put out great guidance in Q2. We basically are just doing awesome. We saw something really, really important happen, though, in March. Our volume 10x'd in March than it normally does because all that volume from the call center just shifted to messaging. And I've never seen it before. In my 20 years running this company as a public company, I've never seen that shift in our business at that rate. And what happened was now we're sort of in the woods with our customers, like building automations, getting those agents home and all that. And it's really, it's a game changer. Obviously this is very bad what's happened to the world, but what's happened to our business, the knock-on effect has been very, very positive.
Well, I also thought that was interesting. You mentioned this was worldwide. I mean, a lot of people have call centers in India. Somehow they thought that would protect the Philippines. It didn't matter. It's worldwide pandemic. This is it, right? It's the pandemic. It doesn't matter where you are.
Yeah, I remember, like one of the weeks in March, one of our customers is a big telco in Italy. They shut down their call centers in Italy, went to Bulgaria, shut those down, went over to India, shut those down. So, it was just happening so quickly. And what people don't realize is that for a large telco or bank, if let's say they have 50,000 employees, 10,000 would be in the corporate office, and they're using Zoom and Hangouts. That's how we're communicating in the corporate offices. Another 40,000 or so would be in those contact centers. That's the largest labor pool. And so what we're doing is enabling that labor pool to connect to the consumers, to basically build those automations to the consumers. And that's where all the volume is. It's not just about Zoom and I'm here and I'm talking to my leadership team and my customers. It's about, how do you talk to a bank? How do you communicate with them? How do you do that now in the era where you can't pick up a phone at all? Contact centers are closed.
Okay, so why did it take, I'm mindful that this is your 20th anniversary, congratulations. Why did it take so long for people to realize, for companies to realize, really good companies, that they were upsetting their customers?
Look, it's inertia. That thing, the call, has been around for 50 years, that contact center, and it's just an inertia in it. And that's all it is. It's hanging on to it. But once again, to see it all shut down globally. I mean, Philippines shut down, India shut down, the United States shut down, all around the world. So and consumers, what did they choose to do? They chose to go to messaging. They chose to talk to automations. That's what they chose. We saw that in our volumes. And so, the consumer has spoken now. And now what we're doing is it's accelerating. We don't want to go back. I don't see how you open a contact center and socially distance people who are sitting next to each other with headsets. It doesn't work.
Okay, so one last question, Ron. Now, I know you had to push your profitability back. You have to take advantage of this. But what do you tell the people who are watching saying, hold on, 20 years, why aren't they making fortunes right now?
No, we actually moved it forward. So we will be EBITDA positive next quarter.
Okay,
that's a quarter.
Right. Exactly. I just meant that in order, when you're EBITDA positive, but you're not the way that our viewers watch, where they're not seeing plus 30 cents, plus 50 cents. You're EBITDA positive, but when pure profitability?
Look, cash flow is going to be 50% better than last year. Somewhere shortly, we are going to be cash flow positive. We were cash flow positive for the last 20 years.
Right.
Last year, we invested heavy. And I'm glad we invested heavy, by the way, because if we didn't invest heavy, we would be here today just kind of trying to grab pieces and scrap. Because we have all that capacity in our servers, our technology, our salespeople. We're out there taking advantage and really capturing the market that's there today. I'm glad we did it, but now we're getting leverage.
Okay,
now
that's what I want to see.
And I want it too.
All right, terrific. Great work. Great work. Always good to see you on Mad Money. Thank you.
Thanks.
That's Rob Locascio, Chairman and CEO of LivePerson, LPSN. And yes, you'll see minus signs, but he's making money in EBITDA. And more important, he's spending when this is the greatest chance to do it. Because I know that was a concern of some of you. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.